In a small apartment in suburban Tokyo, Mrs. Takahashi begins her day the same way she has for decades. She brews green tea, checks the weather, and then she checks the markets. Not because she's a trader, but because she's part of something much bigger. For years, Japan's interest rates were close to zero, and banks paid almost nothing. So Mrs. Takahashi had to look elsewhere, learning to stretch every yen and compare currencies to make her money earn more. Without knowing it, she became part of a global engine, the yen carry trade. She would borrow cheap yen, invest in higher, yielding assets overseas, and earn the difference. It was simple, safe, and it worked for decades. But beneath Japan's calm surface, a giant was growing. Japan's government debt rose higher and higher, the largest in the developed world. Yet as long as interest rates stayed low, the mountain didn't move. Then something changed. Inflation returned, prices rose, and suddenly the Bank of Japan had to do something it hadn't done in a generation: raise interest rates. Even a small rise sent a shock through the system. Mrs. Takahashi noticed it first. Her savings account finally paid interest. Her bond funds moved for the first time in years. And her currency, the yen, began to strengthen. When the yen strengthens, the carry trade begins to shake. For decades, the yen was weak, fueling global markets. But now, rising Japanese yields were pulling the yen upward. A stronger yen means borrowing in yen becomes more expensive. And the carry trade, the giant engine powering global liquidity, starts to unwind, slowly at first. Funds, banks, emerging markets, and even crypto felt it. All of this begins with a simple shift in the life of someone like Mrs. Takahashi. She moves her savings back home, buys domestic bonds, and stops sending money overseas. Millions of people like her do the same. Global capital flows reverse, and a ripple starts in Tokyo. A Bank of Japan meeting, a small rate hike, a sudden surge in the yen. That ripple travels across the world. US stocks wobble, European bonds sell off, Asian markets shake, crypto drops, and carry traders panic. Because when the yen rises fast, 3%, 4%, 5% in a few days, the carry trade doesn't unwind gently. It snaps. And when it snaps, everything connected to it moves at once. This is why the next crisis might start in Japan. Not because Japan is weak, but because Japan is changing. You don't need to fear this, Takahashi. You just need to understand it. Pay attention if the BOJ hints at another rate hike. USD FJPI starts falling fast. Japanese 10-year yields break above 2.1 Fe 2.2%. Or US yields drop sharply. These are early signs of pressure. Worry only if the yen strengthens 3-5% in a few days, the BOJ surprises with a sudden hike, or global stocks fall at the same time USD FJP drops. These are the classic signs of a carry trade unwind. You don't need to panic today, but you should absolutely monitor Japan. The system is stretched, the BOJ is under pressure, and the yen is mispriced relative to yields. This is the kind of macro setup that can flip quickly. Mrs. Takahashi doesn't see herself as a market mover. She's just trying to protect her savings, but her decisions, multiplied by millions, shape the world. As Japan enters a new era of rising rates and a strengthening yen, her quiet choices may be the first signal of a global shift. Sometimes the biggest shocks don't come from chaos. They come from the quiet places we stopped paying attention to. And right now, all eyes should be on Japan, watching the quiet strength of its people.
Most people think the next global crisis will start in America, or China, or maybe Europe. But what if the real spark comes from a place almost no one is watching? A place known for stability, a place where interest rates stayed near zero for nearly 30 years. A place where millions of quiet savers shaped global markets without ever realizing it. This is the story of Mrs. Takahashi, a symbol of Japan's disciplined households. For decades, her simple decisions helped fuel one of the biggest financial engines in the world, the yen carry trade. But now, Japan is changing. Interest rates are rising, the yen is waking up. And the quiet choices of people like Mrs. Takahashi may be the first signs of a global shift. If the world is about to shake, it might start right here.